Good afternoon and welcome to the daily FX wrap up with ForexAnalytix. And we're just touching on what we've seen here in FX and what we have coming up this evening in Asia. We do have in Australia NABM conditions and confidence. Okay. And let's take a look here. That's going to be it coming into the, and then of course, broad money. That's out of Japan. But as I mentioned, we have the Australian NABM conditions and confidence. That'll be at 8:30 my time, which is 9:30 Eastern. And we've seen the euro push up a little bit. Now, there was some concerns about, I saw some talk today, and this is, like I said, just give you my take. We're just doing a quick review because it's relatively quiet here in the markets. Did have, some bank holidays across over there in Europe, I guess. But, the bigger news obviously was the Mexican peso, the issue with the tariffs. We'll just take a look real quickly on that. And we saw the peso going and pair back, and one of the things that we'd covered is we had noted was that we thought we'd go in and see this potentially pull back to this 1923.6. It actually overshot that, came back, and intraday got up to 1923.8, rolled back down. I think it popped up to 1930, and then rolled back down again. We put on here potential to fall to the key level of 1923, which is likely with initial support of 42 and 36. Well, they sold this right off the get-go, but that 1923.6 has been huge. As I said, they even overshot it, rallied back up to 1923.8, rolled back down again, rallied right back up to 1930, and then rolled back, and hence we're here at about 1920. Moving on here with the euro, and I do want to touch base. Some people were getting a little bit overexcited with it. The euro started to slide, and they're like, oh, I think this is terrible. We've already started to fade. Look, folks, I've got to say, it's all relative, okay? Look, it was only a couple of trading days ago outside of today that the euro came down and touched 112 on ECB day. Since then, we rallied nearly 150 pips in a 24-hour period. Okay, so this is after the euro has been just dormant and no volatility. So the thought that, oh, the euro didn't rally even further is just a bunch of BS. Okay, the euro is in a buy mode, the dollar's in a sell mode. We already talked about that. So the thought that, oh, the euro is going to all fall apart, it's a failure because we gave up. Holy smokes, you try rallying 150 pips in less than 24 hours and and then think that just a little bit of a give back is so much. Look, the euro, I had mentioned today, we were rallying back up. Watch out for this 1324 because that was the level we were initially looking at. But we had our stretch target in the room here at ForexAnalytix was 1343, and we did make that push for 43. Made it up to, I think it was 48 before we rolled back, and then that opened the door for us to pull back, which we did today. But look at the euro. I mean, the same people a couple of people ready to write the epitaph for the euro. Well, look at the euro right now. We're back right up here. And I'm saying is, how far is that off of, Thursday's low? Oh, I don't know, like 130, 120 some pips. So yeah, it's not falling apart. It's not coming apart. It's just a bunch of silly talk. Let's go on and move in here to the cash dollar index. And once again, it's a quiet day, so there's not a whole lot. So that's what I'm saying, just trying to give a little bit of what we do like to do is lots of times when we do the webinar, the European crossover, we cover some news. One is called the morning bid, kind of gives what the take is overnight and also hits into Europe. And then we do, one Forex story, maybe more than that if something else was moving. But like I said, it's been relatively quiet. Look at the euro. It's already still pushing up. For those people that were thinking, oh, now it's going to go to hell in a handbasket, which was pretty silly if you think about it. But moving on back here for the dollar, we were looking for, and last Monday, a week ago, that was our target, 96.63, the 38%, which we got to on Friday. And the take was, like I said, that we were starting to roll back lower, and we already mentioned all the things. It's like, one of the guys in the room I had mentioned before had stated, you know, trading is not just all technical. It's, yeah, it's a blend. In order to help you, it's a blend of not only the technicals but a little bit of the fundamentals. As far as any economic data that's come out. One of the reasons that I was so bearish on the dollar as we're coming into this last week was because, as I mentioned, I was telling you that the data was just getting worse and worse, and now pricing in a potential Fed rate cut was not only something that was maybe out there in the distance, was actually something that was really now at the forefront and really opened the door for us to move lower, and hence we saw further momentum and we really started pushing this lower. It wasn't so much that the euro looks great. And like I mentioned last week, people were going to poo-poo the euro. And I was like, oh, you know what? It's this, it's that. It's got these problems. As I said before, tell me something I don't already know. Okay. So really, to me, it wasn't so much that the euro was going to rally. It's basically the rally as a default because the dollar index was going to be sold off pretty hard. The idea is that, it was a big divergent policy from all the other central banks, and now all of a sudden it's not. So it just simply it needed to be repriced. Essentially, that's it. It wasn't so much that the dollar's going to go to hell in a handbasket, but it needed to be repriced. That being said, it did break pretty key support right here, this trend line. And I think we're going to go and move lower. What we're looking for, we're saying the slide on Friday broke the uptrend line. Exponential moving averages aren't sell mode. The index defended Friday's bias chart support of 95.51. So that was actually our support at 95.51. Our target last Monday was 96.63. The low was 96. 46, I think it was. So we're up by like 4 or 5 pips. I put 95.51 in there, but it was 96.51. So it confluenced with the 96.63 to 38%. But what we're looking for is support is found at the pivot 96.24, followed by 96.06. I think we will break lower today. Our bias chart resistance was 96.91. I think we did. I think we moved it up because we said on our analysis coming into the beginning of the week, we said resistance is 96.91. You see that confluence with the broken trend line. But I thought we might be able to push it up, maybe up to this 97.10-ish area. It's on the 2-hour, but we just made it to the 91 and kind of rolled back over. Look, I think these moves today. Cable, we did have some news out and it was rather bearish, or it wasn't, certainly was not flattering. The economic data, excuse me, that came out. And so we did get a little bit of movement, but look at the dollar CAD. Dead as a freaking doornail. After it also, which we were talking about last week, and really it was just going by the technicals. Unlike the dollar, which I felt really confident because the data was so poor, the dollar CAD was really all about the technicals, and really, although obviously it's going against the dollar, that certainly was going to have a big impact. But my take was, we said this last Monday, was look at this poor bar that finished out Friday. If we got a daily close below 34.77, we would really sell off, and we sold off even harder than I thought. And for the analysis, we said, hey, after the repeated failures to grab a foothold above the elusive 3504, the bulls were sent running for the hills in a thorough liquidation. Believe me, folks, all the bulls are gone. There are no more dollar CAD bulls. Okay, those that were looking for 36, 37, they're all gone. Okay, they've run for the hills. So now it's just a matter of us breaking even lower. And sometimes you'll see that when you see a good mass liquidation. No, not the type of liquidation that you talk about when, capitulation. No, but as I said, you can look at this. We talked about this, the market, popping up above the foxholes repeatedly, and continually being shot down, not just a couple of times, but look, right here, sold all the way down to 33.82. So you're talking about, 125 pips. Rally up here, take out 35, sell off to the same 33.82, get up to, above 35, probably 35.20, sell even further down. Okay, then so when we broke lower, we really saw a good thorough liquidation. Probably points eventually, may eventually get down here to 31.36 if we continue to see the dollar index weaken in part itself. We have some support here at the 32.36. I think we missed this one by like a couple of pips. We had that one already set up in the analysis from this weekend. We're looking and said support comes in at 32.36. followed by 3188. Look, this was just technicals. This was no great insight on my part. I'm just giving you the straight scoop. It wasn't. That was just straight up technicals on that dollar CAD. That kept failing and failing and failing relentlessly. Now, today in the dollar yen, we did have our buy chart resistance at 876. We got up a little bit higher. Actually, when we're doing the European webinar, I think we're already there at 870. So we said, hey, look, 876 is good enough right there. And we're already starting to slide back. As I said, I referred to the Japanese yen basically is the canary in the coal mine. And I think that it's not buying this whole rally in the S&Ps and is suggesting, there are gloomier times ahead. Once again, we're not seeing a lot of huge movement here in FX. We have some bank holidays. So really it's just a matter of what I refer to as balancing out. One of the things I do like about the euro, though, we're actually now starting to find some very nice volatility. I mean, a couple of months back, I've actually been driven into the cross rates because there was simply no volatility. But now we're starting to. I mentioned this in the room almost a week ago. I think it was last Monday or either Tuesday. I said, hey, beware. I think we're getting volatility back. I mean, you could just kind of feel it the way certain things were kind of moving. And they're starting to expand. And sure enough, look at this. Look at these moves here that we're starting to get. Now, on FP Day, I thought we were going to get some good two-way action, back and forth, and we really didn't. I actually wanted to buy the euro on a pretty good pullback, and we simply just didn't get it. And then it just rolled. Whoever was still short, it just basically rolled them over. Our bias chart resistance on Friday was 1324, but we had a stretch target, and there's my stretch target. It was 1343. We got up as high as 1348, and we've paired back. But you can see, really, if you look at it from a structure standpoint, that's all we're doing is that them saying people getting all excited. Oh, the euro's disappointed, didn't follow through. Holy smokes, how much more follow through do you want? The doggone thing rallied 150 pips in 24 hours. Okay, so the fact that it's pulling back is a healthy correction. Okay, so we went and pulled back here. We didn't make it all the way down here to 1280, and actually, initially with our support, we were talking here from the Asian analysis was that our first initial support was going to be 1293. The low at that time was 1291. But I thought, you know what? I think we can pull a little bit further. Well, we didn't. Once again, we had bank holidays. We actually had our bias chart support today. We pushed it down to, I think it was 1278. But you see the euro still holding out. And basically, this is very healthy. I'm just saying is for this to add on, this is very healthy the way it's holding up. I'm hoping that it'll dip further back. I'd like to buy this, pull back down here towards 1275-ish or so. We'll see what happens. I'm thinking maybe the dollar index can get a little bit and move, but this has been some pretty good moves here. We'll just take a quick look at cross rates. I think there's been some movement, but what I've been focusing a lot of attention on myself, I did mention that in the room too, is I really do think we're starting to get volatility back in the FX markets, which is pretty crazy when you think that generally summer brings on a quieter time in FX. But with now, I think we're seeing a shift. And the reason I think it is so big is now because the dollar, I think, is now going to start to rotate lower. Doesn't mean it's going to hell in a handbasket, but we'll start to rotate lower. And it's actually going to start pushing some of these pairs, bumping them around. And I think in the sense we'll get more volatility. So I think for me, I like to scalp / day trade. When that happens, if we start to get good volatility, I can focus in on about 4 pairs and just trade that. I did come to the cross rates because there simply wasn't anything happening in the majors for so long, as the dollar just kept hanging in there, and it was easier just to buy the dollar. And one of the things I talked about last week, I think when I was on Face on Thursday, I said for so long, for well over 2 months, 2.5 months, you could wake up, scratch your head, open your eyes, and hit the buy button and just buy the dollar. Well, you bought the dollar on the dip. You bought it on the breakout. You just woke up and just hit the buy button. You'd get your money back. I think that's what the case is with the euro now. Not so much, like I said, that the euro is so great. It's just that as a default, since it comprises 56% of the cash dollar index, it's now pushing up. So wherever you buy, you have that comfort thinking, okay, eventually I'm going to get my money back. There's no guarantees. I'm just saying that's how it was for those that were really bullish the dollar. You always kept getting rewarded, but I think we're seeing a shift, obviously, for good reason. And if the U.S. does start to slow down. Obviously, then we're looking at not only one rate cut in the fall, but extended rate cuts, and the Fed funds are already pricing that in. Looking over here with the cross rates, Euro Aussie is continuing to move higher here. We'll go in and take a look at this one real quickly, and then that'll be about it. Now here, you can see here, and this straight up, once again, just technicals. Here's the analysis from this weekend. The Euro-AUD has successfully defended the key level of 60.95 and breaking above a short-term trend line. An upside challenge of 62.62, wham, bam, thank you, ma'am, it's right there, 62.62, is in the cards with a positive 62. Support is 61.32, followed by 60.95. Exponential moving averages remain supportive. And here they are. You see here how this has been holding this, and this market's not been able to break lower. And look, here we are at 62.62. I haven't actually been trading the Euro. I mean, I was scalping a little bit in and out or holding for a little while, but I haven't done much with the Euro. And when it started to break here, I thought, you know what? I missed my opportunity because it looked like they might break lower. And I'm glad I didn't chase this thing lower. So we've been holding here. You can see that, just holding really well. So as we broke this little downtrend line, the daily, it has really opened the door for this to move higher. And where's the next target? 62.62, and while we're on there it is hitting 62.62. It's actually 62.63 right now. But like I said, I think we're starting to see volatility come back into FX, which is going to be great going forward. The only other one I'll go in and touch on here real quickly is with the Aussie yen, and once again, same thing here. I think is what I refer to as the yen being the canary in the coal mine. And we just simply haven't done anything, and we'll wrap it up with the Aussie yen. Just nothing. It hasn't gone anywhere, and quite often you'll trade this cross rate as a proxy for the equity markets or the S&Ps, and we just simply have not been getting any movement. I mean, you used to see real good volatility beta with this thing. I mean, just very good. So we put in here, Aussie yen is treading water. The pair has failed to respond to the positive equity move, suggesting the yen is playing the role as the canary in the coal mine. Support is 74.73 with resistance at 76.19. We're just going nowhere with this thing, just basically treading water. But that's all we have. As I told you, we do have some Australian Dow today. Thank you for joining us here on the daily wrap-up. Have a great rest of the day trading.